Okay, so now that you got a little understanding of the technical analysis part in reading somewhat of the price action, now you need to know ATR levels. So ATR levels, this is the basics of the system that I trade, and at the end of the day, you just have to trust them. And the only way to build trust is you're gonna have to just go back and you're gonna have to go look at charts. That's the only way. It's either that or I can't help you. I mean, you have to get in where you need to go and just let it play out. But you have to use when you make a plan. So making a plan, what that means is defining your risk reward, and what that means is I am saying that this is the line that's gonna be resistance, and so I'm willing to risk, say, $200 to make, I don't know, pick a number, I want it to go here. So if I want it to go here, then that means that's going to be 125 points. So that's the plan. So if my plan says, I think it's going to go from here to here, if you think that, then you got to hold it till then. And if you did, that would have been 1, 2, 3. 30-minute candles, which what's 30 times 3? That's 90 minutes. What's 90 minutes? That's an hour and a half, right? Hour and a half it took. But guess what? It could have done that in one 30-minute candle, right? What happened last week? Or what was it? The week before? On a Friday. It went from here to the second candle, 150 points in 30 minutes, right? So sometimes it might get there in 30 minutes. Sometimes it might get there in an hour and a half. Sometimes it might take 3 hours. What determines how fast something goes? So with technical analysis, you saw that one, you had a trend and you had a fake breakout reversal. So if you have a fake breakout reversal at a trend, it's going to be violent and that move's going to be quick. That determins the speed of the candle, is when you have more people trapped going long and then they fake people out. And so it's liquidity squeeze. So anytime you're at a level and you fake it, it's going to be fast. When you're not at a level, it's going to be slow. And so that's really hard every day to trade with certain volatility, right? So you're anticipating you want the move to happen now, right? Well, it won't happen now, but you have to build this context to know when and how it should move. So with that said, let's go back down to the basics of ATR. And if you need more information, go to saddyland.com. He might have more information, but to be honest with you, I feel like I'm creating some really good content here around his levels. There's actually strategy behind the levels, price action, around the levels. So, but he might be able to explain, of what it is. There's books out there that talk about ATR. He just created this for TradingView. So what you have is different time periods. So let's look at SPX. So SPX is the overall market. It's the overall S&P 500. You can see that last week we almost hit a +1 ATR. That's why I turn it into orange. You can do what you want to do, but I'm going to click on this, and you're going to see that there's trading type. You have a multi-day. You have a day, multi-day, swing, position, long-term. Day, what that is your day pivots. Day pivots are right here. That means you're playing in the day, right? So how that works is you usually want to be using a 1 minute, 5 minute, 30 minutes for that, and you have certain patterns that will show up. Then you have multi-day, which I use for the week. You can see that this right here was Monday, Tuesday. I'm sorry, this was a short week. So Tuesday, Wednesday, Thursday, Friday. See? So that's why these vertical lines, they separated. I have a 4-hour candle. That's with these overlay candles, which I use the Sonar Alarm HTF candles. It gives me an overview so that I'm not having to trade certain candles. Like I don't have to switch off. I can get a visual of how these candles are closing, you know? And then you have the 30-minute candle. So I see what's going on in the candle, right? Within the 4-hour candle. With that said, then I use the multi-day pivots as my longer term support and resistance. So you can see that on Tuesday, they dropped it in the morning, found support at the second fib, which that's typically a play. And usually that happens if you open below the bear. But here we didn't open below. We opened up here, filled the gap, and then came back down. So they did that. And then in the afternoon, which 12:30 is the afternoon, you have a new 4-hour candle. You can see that they brought it up, back up to the pivot. Then they closed the day. This was after hours. They opened it up below and they filled the gap, and they could not, or they had made a gap, but they could not go back above this candle. So this was a tricky day the next day, because now the morning session, we really were trapped in between these two pivots, right? So you got to know when to hold it and when to fold them, right? And so, but you should be short biased because we're below the bear pivot and our target should be down here. They didn't hit that until later on in the afternoon. And then the last hour, they reversed it all the way up. So, and again, in the last video, I showed you TA that you have 2 points of contact. They rejected this, so you draw a line from here to here. And so this is what you called a little squeeze. You know, even on a intraday, you can see there was a mini. There's a mini lower high, higher lows. You see right here? Higher low, lower high, higher low. Let's go back to let's see if I can go find the chart on the right. Here it is. Look at that. Beautiful. Right here. And then when they brought it up and they broke it out, where's the next spot? Next spot is here. And look at that. Look at the intraday pivots. Here went all the way to the T, right to the bear. So they all this is math. ATR is math. It's average true range. It's just the range of the market. And they play with the multi-days and the intradays and the fibs. The math just works and they all play together. But how do you determine on making what the move could be? Well, look at this. Using the ATR, you know the ATR is going to be right here. All right. So all of a sudden you see that they were consolidating right here, right? And then something happened at 1 o'clock. They dropped it. They brought it back up. They were like squeezing a bunch of people. You see there's some wicks going on here. And then eventually they dropped it back down. But you can see that this was a consolidation underneath VWAP. And then when they broke it down, they dropped it quick. And then they kept on going. And then they reversed it. Then right here, here's another TA play. What do? They consolidated it here. And what are they making? They're making lower highs, higher lows. See how this is a consolidation pattern? They call it a wedge. See, lower high, higher low. It's not making newer lows. So the moment it breaks back out, this is your move. And really your target should have been from here to the breakout of this. That'd been 50 points. But really the squeeze was that. That's the juicy part, because if you recognize the bigger time frame, then you can recognize the bigger moves. And that only comes with time. I know this is a lot of information, and rewatch, watch, ask questions, but if you can identify that, I mean, when you can say, oh, I wish I could watch you in real time. Real time's not gonna do anything, because real time's not means you're not making a plan. You should be making plans as you go, as in, look, they're not breaking down. They could have held this and my plan could have changed, right? They could have came down, broke this, and then my next plan would have come down here. So I'm making plans as it comes, but in reality, you should be looking at breaking up your days and making plans based upon time frames. That's the next thing I want to get into is your time frames. So let's go back to, let me make sure I'm doing this. So understand the time, so trade the levels, understand the times you're trading. Intraday, multi-day. So you have volatility. So normally at 9 o'clock, you'll have 9 or 9:30, you usually have some kind of news, right? So when you have news, that'll move the market. And then you have FOMC and CPI on certain days. That'll make moves, whether it's pre-market. CPI is pre-market an hour before, so it's usually at 7:30. And then a lot of times what ends up happening is they'll either fill the gap or they'll continue it. FOMC usually happens at 1:15 or 1:30 in the afternoon, and usually in the morning they'll have some kind of consolidation, and they don't move as much because they're anticipating some kind of move later on. So with that said, you can see that if you would have played this move right here, what did we do? So as per rules, are you above or below when you open in the pivot? So you're right here. Let's see, where are we at in relation to the chart? I am trying to figure out where we're at, because that was a beautiful play. Oh, here we are. Yep, right here. So this is what's hard right here. Right here, you were opening below the bear, so you should use this as resistance. If you did, it went all the way down to the -1 ATR. But also that -1 ATR so happens to be the second Fib on the bigger picture. So now that move's made, you know there's a lot of volatility, so now you should say your line in the sand should be that multi-day pivot, right? So where's the multi-day pivot? Is right there. So at no point of the day should that ever cross that, but you want to get as close as you can to that if you want to make another move. So the market doesn't always move, and this is the one thing you'll have to learn. The market never moves in a straight line. There's always waves, but you got to know when those waves happen, right? When to take profit. So if you would have took profit right here, this would have been your reload, and then it came all the way back down. And look, here was another consolidation. Here's a TA move right here. This was your lower high, higher low, and you're below a level, so you need to be shorting. Here's the break, came down. If you missed it, reload all the way down. And they almost made it all the way down here to this extension of the Fib. But guess what? You gotta be careful. Because of this. Remember, you always gotta be wary of how that candle closes. And the moment this candle right here did not close, it tells me they possibly could be scooping it up. And look how violent this was, right? So they scooped this up real quick. They consolidated it, and then the rest of the afternoon they came all the way. The trend was no longer down. The trend was up. They held support, and now they're coming back. So again, it's a lot. This is a lot of information, but you want to be looking for patterns near levels, making a plan. What do you think? Okay, is going to break out? Where's your target? If you are just playing for a scalp, you're not trading. You're just not trading, and you're missing out on the bigger pictures. I rather make $1,000 or $2,000 in a day on one move than making $200 every day or $500 every day, because that tells me I can make that, and then I could be done for my week if I wanted to. If that was my goal, to make $2,000 for a week, right? So that's why. But the moment you start over trading, your brain gets mushy. You'll get mushy, and it's hard to think clear and to look at these bigger picture plays. So again, let's go back to the TA and how, not TA, but levels. So that's the reason why these levels are important on the multi-day to know where you're at, but then also on the intraday to know where you're at. So there's a couple plays that I considered, at least on the intraday, and you can also say multi-day, is I call them, if we open below the bear, we're usually going to stay in that bear zone and we can go lower. If we open below the bull, it could be a reversal. It could be a chop day. Normally, if you open within the box, it's going to be a box day. But sometimes you might have a push, and then you might have a fail all the way to the mid-range ATR. So sometimes you have this move. Sometimes you have this move where you come down and you open and you find this as support, and then this ends up coming all the way to the mid ATR, right? So you need to be careful of where we're at. Where's support, where's resistance? It's support or resistance until proven otherwise. So if this ends up breaking below, it needs to break with speed, and it needs to have a candle that closes. And then what you would hope for it to do is you would hope for it to then come back up at some point, retest, and then which would give you the best risk reward, knowing that, hey, if I'm wrong, I'm only out a little bit, and then you would want it to come down. So there's a lot of different plays, and the only way to know that is by looking at your multi-day. So we'll go into that as a plan. So that's the plan. I say that's the plan. This is how you play multi-day again. Okay, so it's the same intraday. So in this particular day, what did we do? We gapped up and we opened above the bear or the bull. So do you think we're going to go lower? I mean, honestly, do you think we're going to go lower? If you do, then short it. But why would you think that? That's support, right? The only way that I'm going to go lower is if it tells me it wants to go lower. And the only way it's going to tell me it wants to go lower is if, look, it told me it wants to go lower. You see how you have a solid 30-minute candle below this? That means their odds are it's not going to come back up. And if it was going to come back up, it was going to do it within the next 30-minute candle. It would come down, and then the next 30-minute candle would have to close back above for that to be a failed breakout reversal, right? So that's the next thing I want to teach is the failed breakout reversals. So this is not necessarily a failed breakout reversal. This is just a look below and fail. So a look below is where it looks below and then it couldn't close. A failed breakout reversal is where you have a solid candle above and then it comes back below. See right here? Solid candle above. And see the 4-hour candle right here? Same thing as the 30-minute candle. It closed and came back below. That's a failed breakout reversal. And those are violent. You see how violent that was? It didn't just stop here. That was the peak. That was it. And then it came all the way down here. It was a 500-point move. 500-point move in 2 days. 1, 2. So that's why I think on next week, I think we're gonna go lower before we go higher. The only way we're gonna go higher is if they break above here, this area. That's the only way that I feel like we're going to start our week off is higher. If not, they could end up coming back up here. And if they do, they could be a double top and then they fail, right? So that's how you play these levels. Failed breakout reversals. Important time. Oh, let's go back to important time frames. So write this down. Let's go back to here. Okay. So the first 30-minute candle is important because a lot of times they do these fake run-ups like this. Sometimes they do that the first 30 minutes. Sometimes it's the first hour. Like I was hoping they were going to push up even up to here and then they break. Because if they do, that's really violent. So look for a failed breakout reversal first 30 minutes. If they didn't held, then they would have kept on going. 9:30 is important because it's either 9 or 9:30 that they do the they have news, and sometimes on Friday that's what happened here. This probably was some kind of news. So 9 o'clock they'll have news that they'll report on a Friday, and if they do, just know that eventually it's gonna probably want to go down here, and then if this broke, it's gonna want to go down here. Like I gave up a lot of my games because I thought we were gonna go lower. And so then I got stopped out and I too got emotional and didn't flip, right? I was too emotional. So how the next thing that you have to understand is super important. It's the 1030. Why is that important? Where are we at 1030? Tell me, are we above or below a pivot at 1030? At 1030, we are above a pivot. The closest pivot we are above, and we are in the box. Look, it's a box. It's above the bull, or below the bull and above the bear. So that 1030 is the European close. So there's not enough momentum, enough people in the market to really want to take the trend lower, right? So the odds are in the favor where we're going higher. So your next move, that would have been a 50-point move, and then you should have been done. That should have been done for the day. Because the rest of the day was a lot of chop. And the next move would have been probably around here for the low. But that 1030 is important because this right here tells me which direction they want to go. The other important is the 12 o'clock candle. So you ask yourself, where are you? Are you above or below the pivot at 12 o'clock? You're below the previous week's or day's close. That tells me it's weak, right? So yes, it could go above, which it did, but it just tested the high right here. But then it failed at 12:30. It came back below and went lower. So if this was above here by 12 o'clock, I guarantee you they would have came down and retested at 12:30, and then they would have gone higher. They would have came all the way probably up to the highs, or at least to this pivot. That's how you play the 12-12-30 candle. Knowing where you're at, believing in where it's going at, and then just going in that direction and letting it wait out. The other reason why the 1030 candle is important is this. And the 12 is a trend day. Look where we're at 1030. We're right here. We're at the highs, right? This potentially could mean we're trending higher. We're making new highs, right? They should never have done this by 1030. They should have already been down here at 1030 and potentially either chopping around. This is not necessarily a chop day right here. This is a trend day. Plus, again, remember the rule. Here's another rule. Write it down. I say rules. I keep saying rules over and over and over, and you're going to be tired of me saying rules. The rules are timing rules and pivot rules. That's it. Pivot rules means which pivots to use. In reality, the day before, this is potential trend day. You have to ask yourself at the beginning of the day, should it be a trend day or could it be a chop day? Well, it's a trend day. Why is it a trend day? Because it's a volatility day. You had a lot of volatility. You're above this pivot, so you need to be using multi-day pivots. If you use multi-day pivots for this day, you would have been trading that entire move, and you would have been trading in between here. And you would have got faked out a lot. See, look at all these fakes. You would have got faked out, and you'd be missing the bigger picture, right? But this is some big moves. If you know how to trade this, this was 60 points right here. 60 points up, 60 points. There was like a ton of 60-point moves right here, just in the beginning. Because a lot of times you'll have that first morning session, the 2.5 hours, a chop. So see, this was chopping around, and then at right here, 11 o'clock, they made the move, and this is when the trend actually happened. And when I say trend, as in they weren't dropping, they were just buying it up, scooping it up, and sure enough, see, you would have got chopped out right here if you were playing the intraday levels instead of looking at the bigger picture, which is right here. So that's the 12. That's the 1030 rule. 1030 is where we at. Are we in the box? Are we below the pivots? Where are we at? If not, then that's your reversal area. See, look right here at let's look at yesterday's 12 o'clock. So that's what I mean by using the 12 o'clock candle to help you for the rest of the day. Because if you would have done that, you could have came and you could have got in and gone long, and you would have made the afternoon session. You would have made the 100 points just in the afternoon, right here. You could have made this move right here. It was 63 points actually, And this was a consolidation breakout right here. See this? This was a consolidation. How I know it's a consolidation breakout? Again, goes back to patterns. So where are we at? We're above a pivot, and we're above a multi-day pivot, right? And let's go to a 1 minute. Let me show you what I'm talking about. So you're a lower high, higher low. You see how they're making lower high, higher low? See how right here? They were down, boom, they scooped it up. They didn't go lower. So here, this is a consolidation, and then they broke it out. And then once they broke it out, this was also a new TPO. Look right here. This right here, this spot right here was 1230. And that was at the high. That was the high of the morning session. And then from there, they just kept on going. A little pullback, and they finished it off. At least to this level. But guess what? You still have more to go. This level right here, the multi-day pivot was right here. And look, it just kept on going. So that took about an hour right there. So that's how you play your pivots. Important. And I'll repeat it one more time because I know that was a little bit back and forth. So, oops. Look at your 30-minute charts on the left. I like the 5-minute charts on the right. The reason why 5 minutes, because it allows me to see how candles are closing. You know, I'm getting wicks. I'm not getting wicks. So I'm not convinced. And then when we close, now I'm convinced. Now I know we're going to have, and look right here. This is the last 5-minute candle. So last 5 minute, you had your push down, push up. So you don't need to be making every move. You just need to make the moves you want to make for your goals. This could have been your move. This could have been your move. This could have been your move. 50, 50, 50, 50-point moves. But again, why would you want to be chasing in the middle? Why would you be trading in the middle? I'd rather get stopped out a couple times, and but again, you can anticipate these moves. It's all about anticipation. I would never have got stopped out here. Why? Because I'm anticipating more downside. So I would get in and I would give myself more room. Like I honestly gave myself a lot more room, because and honestly, I knew that this was going down. Because why? Fake breakout reversals. Fake breakout reversal. That's what I'm saying. Homework for you is to go back and look. Spot the fake breakout reversals. Spot them. Spot them. Here's one right here. Down, up. Consolidate down, up. Where are we at? Look at that. This was FOMC right here. So that's why they scooped it up, but then they sold it off right here. So you got to know your time period of when to know when to pull the trigger. So if you would have been in this, you would have thought, oh, we're going long, and then you would have got wrecked and then not reversed. So trading is really difficult because you have to be really nimble if you're a day trader. There's people that are able to do this easily because they just have a simple, easy plan. They trade one plan or two plans a day and they call it, and they're not chasing things all over the place. So use those levels as a key, as a guidance. That's the key, is using it as a guidance. There's no guarantee, but you have to see where you're at. Also look at different areas of position. So if you look right here, the swing mode is called swing mode is a quarterly. That's your quarterly position. So if you notice, right, or is it quarterly? I'm sorry. Your swing mode is your monthly position. Your multi-day is your weekly position. And your position is your quarterly position. So look right here. You see this was the whole month. This was January or February 1st, 2nd, 3rd, 4th. And you see how it plays? Look right here. This was a failed breakout reversal. I mean, Jesus Christ. I mean, if I would just play this on the monthly level and understand where is the big money at. that. That's what you want to look at. And you see, if you want to know this right here, I would have known to short it. And where's your target? Fake breakout reversal. Scooped it up, came down. Now they're back above. So what does that tell me? That tells me what I think is going to happen is they're going to come back and retest this area next week. And then they might, because next week is the end of the month. So they might come back down and retest this. And then you have right here is the end, is the last day of the month. So they might come back down and retest it. And then the last 2 days, they might rip it all the way to a +1 ATR, right? But guess what? Right now, on the bigger time frame, on the S&P 500, we're in the middle of this. So they could do anything, right? But again, you don't need to be worried about that but I just want to show you that as context. So you sort of understand where things could possibly go. Like we're going into resistance. That's for the month. Now guess what? Look at where the S&P 500 is on a quarterly. So we go to position. We broke for the quarter the mid-range ATR as well. So in reality, again, they could come back up to the 50-60 area and then by the end of the quarter, which would be at the end of March, they'll come up to the 52-38 area. So there's room up there. But at any point, they ever come back down below here, then there is a possibility. One, there's a big gap right here. They could come all the way back down. But let's see. I mean, there's also, you got to be looking that we could be in a trend. You know, here is a potential. So let's look at some TA. So we could be looking at some kind of trend right here. So this could be overextended, right? And then they can consolidate it, break back below, back into the trend, and then go back up. So the market is just moving in a wave right now. So I'm not convinced until possibly the second quarter that they might have some kind of reversal. And this year, they might not come back down. We could just continue to keep ripping. You know, it can get up here, they could break it back down, but then they can reverse it back up, you know? So your job is not to predict where it's going to go. You just want to be able to get in where the moneymaker, the big money is going to be at, in the extremes. So that is how you use the pivots, and works well with portfolios, especially like if you're looking at, let's look at Tesla. I mean, it gives you some really good ideas of what potentially Tesla could be doing. I mean, look at this. Tesla on a position on a quarterly, it's below the mid-range ATR. Here's the -1 ATR. It looks like we're on some kind of weird trend, but I honestly think by the end of the quarter, they might actually consolidate it right here and then break it down and hit the -1 ATR. We're on a downtrend on Tesla, even though the market's ripping, but Tesla is not doing as well, you know. But here, if at any point this comes back above here, then it could go back up to this trend. And here's another TA. This is a trend line. So I honestly that's why it's good to sometimes look at a daily chart, and not to get a sort of a bigger idea. So bigger the time frame you're using, the bigger or bigger like a position, multi-day, you want to be using like daily or weekly, right? Because then you can spot patterns. See, you spot these little patterns of where things could go. You're consolidating right here. Fake. This was not necessarily a fake breakdown, but look, they scooped it up. See the wick, and then they shot it up all the way almost to the bull pivot, and then from there, the next quarter, they just destroyed it, which would have been this year. I'm hoping to scoop. I would love for it to come back down at some point down to 100, you know, and that would be considered. They might not end up doing it. The lowest might be like 167, and then at some point next year or a year or two, then they end up ripping it back up to the 400 area or beyond. So that, again, that's TA, but in the short term, that's sort of how you read of whether something's extended or not. So like if you go and double click on this, and you do, say, long term is where you want to be looking at. Oh, they didn't do that right. Yeah, long term may not work as well. But see, we already went to a -1 ATR, which that should not have done that. Position. Yeah, we didn't even get to a position on that. There must not be enough. There's not enough data for it to be long term. I think Tesla's still, even though it's been around, it's still somewhat of an infant company to do that. So, anyways, that is pivots.